Hello, my name is André Sapir. I'm a senior fellow at Bruegel and would like to welcome everybody to this event on Italian and German economic cultures. Every summer, for the last 10 years or so, a bunch of German and Italian economists and a few others, including two Belgians like me, meet for a few days in a beautiful Italian villa located near Lake Como that belongs to the German and Italian Ministries of Culture. The purpose of these meetings is not just to enjoy the beautiful view that you can see behind me. The meetings at Villa Vigoni are meant to foster exchange and understanding among German and Italian economists, mainly from academia, policy circles, and the banking sector, about the working and problems of the European Monetary Union and solutions to these problems. It was therefore fitting that two economists who regularly attend these meetings, one German, Thomas Meyer, and one Italian, Francesco Papadia, together with two members of the Villa Vigoni staff, took the initiative to produce the volume entitled The Value of Money, Controversial Economic Cultures in Europe, Italy, and Germany that we will be discussing today. The volume goes into the histories of the German and Italian economic and monetary cultures, how they evolved during and before and during the creation of the euro, and how they partly continue to impact the thinking of German and Italian economists and officials during the last 30 years since the launch of the euro. To discuss these ideas, we are fortunate to have with us one of the architects of the euro and former president of the European Central Bank, Jean-Claude Trichet, also a former chairman of Bruegel, and three central bankers from outside the euro area, but who have had close interactions with the ECB. Patricia Mosser from Columbia University and formerly with the US Federal Reserve, Hiroshi Nakaso from the Daiwa Institute of Research and formerly with the Bank of Japan, and Marianne Nessen from the Swedish Riksbank. They will each make some introductory remarks before engaging in a discussion and question and answer, where we will also bring in Thomas Meyer and Francesco Papadia. You, the audience, will be able to participate actively by posing questions using the Slido application. And when you open this application, you should enter the code. It will ask you for a code. The code is value of money in one word without any break. Not the value, but value of money. So I will remind you this again when we will start the question and answer. Jean-Claude, let me turn to you. And would you like to start off?
Thank you so much, André. I hope communication is okay. It was, of course,
Perfect.
a great pleasure to say yes to, I would say, help presenting this marvelous book. I am very moved for two reasons. It is with Horst Köhler, Mario Draghi, and all other friends that were Direttore del Tesoro, Staatssekretär of the other European country that we negotiated in 91, the Maastricht Treaty, the draft of the Maastricht Treaty. We were all representing cultures. Of course, Horst and Mario were representing their cultures whilst being deeply devoted Europeans. And it was with my dear friends, devoted Europeans, equally Tommaso Padoa-Schioppa and Ottmar Hissing, that I worked in the executive board of the ECB. Dante and Goethe were often in the conversation with Tommaso and Ottmar, and Francesco Papadia knows a lot about it. I would say the book is extremely stimulating, in my opinion, for three reasons. The first point is that the book shows that many narratives make no justice to many facts that are known, but very often forgotten. For instance, the lira never experienced hyperinflation. The lira was not as weak as was the currency in Germany at certain period. This is forgotten because we are looking at the essence, and the essence does not represent what really happened in the past. Also very interesting is that Italy invented the double entry system of accounting and invented largely financial capitalism and the modern banks. That is part of history, and that is still, of course, part of the legacy, the cultural legacy. Equally, in Germany, the independence of the Bundesbank was not a spontaneous creation of Germany, but designed by the Allies after World War II. Konrad Adenauer was profoundly irritated by this independence, and by the way, engaged in a quarrel with the Bundesbank, which was, I would say, accepted and victoriously by the Bundesbank at the time. There is a point which I trust in this, I would say, shock of culture, which is very, very important. In my opinion, there is a misunderstanding of the high degree of frankness in the German public debate, because it is a representative democracy. The last word belongs to the parliament. And the arguments, pros and cons, are exposed very openly in Germany, always, as is the case, of course, in any parliament. The communication, the global communication, the European communication takes the cons, never the pros. The pros are not interesting at all. And that's the reason why there is a sentiment that Germany is always aggressive with other countries that are in need. But after the heated debate, when help is needed, the last say is, okay, we join. And I mentioned that because I think it's important to have that in mind. A second point, which is very, very important, is that the two cultures are complementary. I would say, if I refer to Max Weber's famous distinction between ethic of conviction and ethic of responsibility, the German culture inclines towards the ethic of conviction, and the Italian culture to the ethics of responsibility. Clearly, there is a spontaneous tendency. When in August 2010, so only a few weeks after our first high non-standard measures, when we purchased in the ECB treasuries of Greece, Ireland, and Portugal, I was myself referring to these two ethics. I was not referring to the fact that the German had inclination to the ethics of conviction, but I mentioned ethic of conviction is associated, in my opinion, and overall, I would say standard measures of monetary policy. And the ethics of responsibility is associated with the non-standard measures, which we started in May 2010 very, I would say, visibly. And I was mentioning the fact that the two were absolutely necessary. Even Max Weber said himself, the ethics of conviction and the ethic of responsibility are no absolute opposite. They are complementary to one another. And I really trust that this is very, very important in many respects. And that of course, is something which is still true, profoundly true. We need both. We need the German culture and, say, the north of Europe culture, and the ethic of responsibility, of conviction, and we need also the ethics of responsibility, of conviction, and we need also the ethics of responsibility. And by the way, this distinction between the standard and non-standard measures is a long time after 2010 still there. I would like to mention a last point, the third one, which I take it as very important too. Whatever the history is, whatever the recent history, the long history is, we clearly have a difference in the social partner cultures in both countries. The social partners in Germany are very profoundly influenced by enterprises that are exporting. In Italy, I would say, and maybe I'm influenced by France also, there is a strong position of the social partners culture of those who are not exporting. The, I would say, public function, the civil service, the big utilities, and so forth. It's truer in Italy because you have the, I would say, one culture in the north of Italy and another culture in the south of Italy, but all taken into account clearly between the north and the south of Europe. This difference in social partner culture, the culture of the export enterprises on the one hand, and the culture of the non-exporting entities on the other hand, explains a lot of the difficulty we have today. And my conclusion is it is up to the European institution to take that into account and to give the appropriate representation, recommendation to both countries, because the tendency of Germany might be to exaggerate its culture. And of course, the tendency of Italy, say France and others, is to exaggerate their own culture. This has to be counterbalanced, if I may, by European institutions. Thank you very much for having given me so many minutes.
Thank you very much, Jean-Claude, for bringing those very important points. And I think for demonstrating once again that you do embody the two ethics of conviction and responsibility. That is very, very, very clear. So I think you were able indeed to bring in from your vantage point all the history, the participation before the creation of the euro from the ministries of finance, and then indeed your role and your experience at the ECB and witnessing indeed those different cultures. I think it was very important. I think what you said towards the end about the difference being more from the social partners, and I think we should come back to that in the discussion. So let's turn now to our friends and colleagues from outside of the euro area. How have they perceived these issues of different cultures within the euro area, and in particular from Germany and from Italy? So first of all, Patricia, let me turn to you. Your long experience dealing, when you were at the Federal Reserve, dealing with the ECB and in general the European institutions. So what is your perception based on your own experience and the history of the US also?
Thank you. Good afternoon, everyone. First of all, I'm incredibly optimistic about let me state right up front about the European experiment, shall we say. Not much of an experiment anymore, but maybe in progress would be better. And I want to thank you for including me in this event. It's a pleasure to see old friends, but also to speak for a couple of minutes about the challenge of being in a central bank that has to bridge different economic cultures. And in this case, I'm going to focus on two things. First is the complexity and the ongoing challenges of being a single central bank in a really large, exceptionally diverse jurisdiction. And in this case, I'm talking about the United States and the Federal Reserve rather than the Euro system. And as I go along, I also want to say a few words about the different flavors of political union, monetary union, financial union, fiscal union, with a few reflections from the United States. I hope you'll take away a couple of things from my comments. First of all, there's like no exact right way to get there. It takes time, numerous small adjustment and changes, cooperation along the way. And here I want to completely agree with what Jean-Claude just said. But even when you have greater integration, the central bank's balancing act is still there because monetary policy creates unequal outcomes sometimes. You're not going to eliminate basic social differences, at least not very quickly. And the central bank has to acknowledge that and take it into account and in some ways communicate about it. And I'll talk about that a bit as well. So the US's experience is a kind of interesting historical comparison, I think, to the Euro system. Again, it's the challenge of running central bank policy in a jurisdiction with enormous heterogeneity. It is physically very large geographically, very diverse regionally, diverse in its economic structures and comparative advantages, in its social norms and ethnicities, and in its politics. And I mean really, really diverse in its politics, if that has not been obvious in the last 5 years in the United States. First of all, just to state the facts, the US had no central bank for more than 85 years. It was a political union. It was a monetary union only in the sense of it had a single currency, not that it had a single monetary policy. It really didn't have a financial union. Banks were all state-based, and very, very limited fiscal union. Basically, national defense and tariffs was it. In short, the states ruled in economic policy. And finally, by the time the US became a large emerging market in 1912, it was determined that a central bank was a necessary evil. And I use that term very seriously for several reasons. The first reason was for international business purposes. The United States was quickly growing in international trade, and it needed a central bank. It needed it for financial stability purposes too. A series of incredibly horrible financial crises, like every 4 years, and they needed lender of last resort. And finally, to smooth out the seasonality in interest rates, which sounds weird, but the US had very seasonal interest rates. In short, a cornerstone of the Fed's design reflects to this day the American suspicion, hatred in a few cases, of centralized national government. So the first try at the Fed that went on for more than 20 years, there was still no national monetary policy. The 12 regional Fed banks set the discount rates in their own regions and then had them approved in Washington. And they were not the same. They were often different and reflected differences in credit growth, interest rates, their local economies. There was no national credit policy, no FOMC, and so forth. Well, that only lasted until the Great Depression, and the shortcomings of that regime became extremely obvious. But it was not until 1935 that the FOMC was created, and the U.S. actually had a real monetary union in the sense that we think of it today. It also had a financial markets union, for the record, not a banking union, but a financial markets union at approximately the same time, and the beginnings of a fiscal union. So after that, did this integration sort of make it easier on the central bank? Well, in some ways, yes, but not completely. With this kind of diversity, monetary policy always has unequal effects, and it's not going to satisfy everyone. The high interest rates of the early 80s, which were necessary to tame inflation, were permanently devastating to manufacturing in the United States, just permanently devastating. Was not a temporary impact at all. On the other hand, and trust me, if Illinois and Ohio could have had a currency they could have depreciated, they would have been happy to do it at the time. Exactly the opposite happened in the early 90s with a real estate boom and bust that happened on the coasts. And again, the economic impact was incredibly uneven across the regions. So a central bank's not going to be able, in a really diverse jurisdiction, it's not going to be able to mitigate the unequal impacts of monetary policy all by itself. What it can do is communicate and particularly cultivate the populations that it serves. And interestingly enough, here, the regional diversity of the Fed has an upside. Those 12 bank presidents who attend the FOMC, who are not political appointees, and it looks all very undemocratic, well, they view themselves very largely as conduits between their region and the monetary policymakers in both directions. They spend a lot of time at every FOMC meeting talking about, and I mean a lot of time, if you've ever read a transcript of the FOMC, talking very locally and very regionally about what's going on. On the flip side, they spend an inordinate amount of time speaking to the populations in their districts. And I don't mean talking at universities or at big conferences. I mean talking to local chambers of commerce, local labor unions, local business groups, community groups, trade associations. The amount of staff that most have to work with community groups, business groups, labor groups, state and local government groups is high. Over the decades, the Fed has managed, the banks I'm talking about here, have actually developed reputations locally as apolitical, honest brokers about a lot of different economic policy issues. And it is an interesting outcome, so that when monetary policy, because it's national, has a very unequal impact on a region, there's A, someone to go to complain to, and B, someone who's willing to talk to you about what the bigger picture is. It's an interesting dynamic. It's not perfect, but it has turned out to be one of the big advantages of the structure of the Fed system. Let me just offer a few final remarks about monetary unions and fiscal unions. As I noted, having a monetary union before a fiscal union is not that uncommon. I don't think the Euro system is that odd in that regard. The US beginnings of fiscal union as we think of it today started in the 1930s, but it really wasn't until the 1960s that fiscal union as we think of it, willingness to do national counter-cyclical fiscal policy, automatic stabilizers, implicit risk sharing really came into being. One little aside, fiscal risk sharing in the United States, which is pretty large, is almost never discussed. In fact, in the public opinion, there's a strong belief that the states with the lowest state taxes pay more to the federal government than they receive. So if red states pay more and blue states have the benefit, for lack of a better term. The reality is exactly the opposite, of course. And that creates, I think, a quandary because willful blindness on that topic is not something that's going to be possible in the Euro system. But the rest of the US fiscal structure basically reflects the same dislike of a large federal government that the central bank structure does. As a result, a huge amount of fiscal policy to this day remains with the US states. They're incredibly potent, politically important, and they clearly limit the power of the central government. All you have to do is look at the policy response to COVID to see a clear example of that. Even unemployment insurance, which is kind of the ultimate counter-cyclical fiscal policy, is state-based and mostly state paid for in the United States. And there's big diversity. Massachusetts pays 3.5 times what Mississippi does to its citizens when they're unemployed. In short, the US has found ways to allow for very wide diversity and local control and impact, but to still have an overarching national fiscal presence. And in crisis times, and here I hope I'm going to echo, I hope I'm going to say some things that others are going to pick up on. In crisis times, that national level, both the central bank and the fiscal authorities, are when you really, really, really need them. In sum, the US version of monetary and fiscal union reflects decades of political and economic adjustments, a little bit of willful blindness about fiscal risk sharing. It's not a fast process, and there's no one size fits all. I actually think the Euro system in many, many ways is far, far ahead of where the United States has been when it tackled these problems. And it's one of the reasons I'm optimistic. Thank you.
Thank you. Thank you, Trish. I think it was a fascinating journey in history of the US. And, you know, we often do that in Europe, indeed, compare our situation to the US. So it was really fascinating to hear from your viewpoint, you know, where we are and, you know, how the US has evolved and how it was not such a easy story. And it took a long time to get where we are, and still today there's still lots of open questions. So now we move to Japan, and Japan is not a federal country like the United States. It's large, but it's not as large as the United States. And so it'd be very interesting to hear from Japan how are those issues of different cultures, of different interests perceived, and how do you perceive the European experience? What is the Japanese experience in this respect? So Hiroshi, the floor is yours.
Okay, thank you, Andre. I'm happy to be with my former colleagues of the central bank community. I found the value of money book fascinating from the perspective of my central banking career, which I had countless occasions of interacting with the ECB, Bundesbank, Bank d'Italia, as well as German and Italian individual central bankers. The topic of alpine divide was also interesting for me personally, as I was brought up in northern Germany as a young boy in the late 1960s. In summer holidays, we used to head south, and how the climate, landscape, and culture, food changed once crossing the Alps is deeply enshrined in my boyhood memories. The book, I think, reminded me, however, that as Francesco noted in his book, that instead of being inclined to look for immutable metaphysical characteristic of Italy and Germany, we should search for different conditions that explain different performance of the two economies over time. I fully agree with his view. Now I want to make 3 points. First, I looked for commonalities, if you like, among the Bundesbank, Bank d'Italia, and the Bank of Japan, to which I belonged. The Bank of Japan was founded in 1882 as a central bank of a nation that was a relative latecomer and thus was eager to catch up with the industrialized powers and nations. Inevitably, the Bank of Japan was expected to support the national objective through its policy to pursue price and monetary and financial stability. The subsequent history of Japan, I think, shared much in common with Italy and Germany, but perhaps more so with Germany. The two economies, Germany and Japan, were totally destroyed in the Second World War, and the post-war economic reconstruction in both economies was driven by constantly enhancing the competitiveness of their export-oriented manufacturing industries. This was, according to Jean-Claude's words, the culture of social partners in the post-war Japan. Therefore, for example, labor unions for most of the time, as a part of Japan Inc., prioritized companies' growth and excellence over wage increases. The unions were, I think, of the view that growth contributed to job security and better life over the longer run. The word like fleißig, German, or being diligent was a common virtue for the post-war generations in both economies. I remember German people in my parents' generation often referred to Japan as ferne Gefährten, meaning distant companions, because of the societal commonalities, also geographically apart. In the monetary policy arena, the Bank of Japan used to be better known as an inflation fighter, just like the Bundesbank, until the 1980s. I think the economy successfully survived the two oil shocks in the 70s, avoiding inflation. Thus, in the post-war period, until the bubble economy in the 1980s, I think the Bank of Japan shared a lot in common with the Bundesbank. But this was not a permanent feature. The subsequent bursting of the asset bubbles and the homegrown financial crisis of the 1990s in Japan, I think proved a kind of game changer that transformed the way the Bank of Japan operated. The second thing I want to say I did was to reflect on my experience interacting with the NCBs and the ECB in serving as chairman for the BIS Markets Committee that comprised 20 central banks at the time and discussed issues related to financial markets development and the central bank's market operations. During my tenure, we encountered the global financial crisis and the European debt crisis. The committee was the place for informal discussion among the professional central bankers based on mutual trust and goodwill. But during this European debt crisis, divergence in views between the north and the south of Alps, I think, surfaced. And one such case was the controversy over the implications of a buildup of imbalances in the target 2, where the Bundesbank claims in the euro system on the one hand, and the liabilities of Banca d'Italia and Banco de España on the other hand grew larger. Now, my understanding at the time was that the larger imbalance was caused by an increased reliance of banks in the South on the 3-year LTROs, because banks in the South were unable to fund themselves in the market. Now, from the Bundesbank's perspective, this was caused perhaps by, as they see, caused by behavior of banks in the South taking advantage of expanded scope of eligible collateral against which they were able to borrow as much as they wanted from the ECB on a fixed rate full allotment basis. I think the Bundesbank's view was that the claims have grown to intolerably high levels, that it was in effect monetizing Italian and Spanish debt, transferring risks from the South to the North. Now, the South counter-argued that the only case such risks materialize is when the euro breaks up. Meanwhile, the ECB, represented by a German individual who succeeded Francesco after he left, said the target 2 imbalance was merely an arithmetical reflection of increased precautionary demand for liquidity of banks in the South. To me, the controversy appeared another byproduct of the monetary union preceding the fiscal union in the euro area. Now, this episode leads to my third and final point, that despite many challenges that lie ahead, I remain fairly optimistic about the future of the euro. Like in the episode I told you, the ECB plays a critical role here. Although inaugurated as a central bank to inherit the Bundesbank DNA, I think it evolved into a kind of pan-European institution that is performing a catalytic role in blending the two cultures on both sides of the Alps. So therefore, I echo the view that crossing the Alps is possible. I think I stop here. Thank you very much, Andre.
Thank you, Hiroshi. It was equally fascinating to hear your views, reflecting on Japan's history, and then how German and Japanese history were so close in the conduct of policies. One could say, as you put, so partly cultures, and then the divergence 30 years ago. And I think that's something that we should probably come back in the discussion when we talk about structures or conditions versus cultures. What is the fundamental determinant here? So let's turn finally to Marianne Nessen. She's not from far away. She's from Europe, from an EU country, but an EU country which does not belong to the euro, Sweden. So it would be very interesting also to hear from you, Marianne. How do you perceive those issues? What are your reflections on this discussion about divided cultures between Italy and Germany? Is that where the issues are? Is it about culture? Is it about something else? And your view again as a European close to the euro area, but just immediately outside. Marianne, the floor is yours.
Okay. Thank you very much, Andre. And it's so very nice to be part of this discussion and seeing my old friends from the Markets Committee again. I think my main points, I will begin by making some remarks on this issue of economic culture. And I will talk a little bit about how they can change, perhaps using Sweden in the past decades as an example. Then I will come back to talk a little bit about my experience in the Markets Committee. Was there an alpine divide there? And I will finish off, if there is time, to put in a good word for the euro. Now, I must begin with a disclaimer because I'm still with the central bank. So any views presented here are my own and not necessarily those of the executive board of the Swedish Central Bank. So to begin my remarks, I'd like to discuss the theme of cultural differences that underlie many of the chapters of this really interesting book. These cultural differences are presented or labeled as Germany versus Italy or North versus South. I'm going to use rules versus discretion because I think that I like that better. And I would like to shed some light on the rules and discretion versus discretion debate by revisiting recent Swedish economic history, where Sweden or Swedish economic policy went from being more discretionary to being rules-based. So as a background, we have to go back 5 decades to the 1970s. And so following the breakup of Bretton Woods, Sweden tried to sort of mimic what was being done in Europe, and we tried to follow the snake and the tunnel in the snake, but all of that was never successful. There were recurring devaluations in the 1970s and beginning of the 1980s, and of course high and variable rates of inflation in the 70s. And in the 80s. But then in the 80s, the latter half, for a while, things were looking better in some respects. We had a stable and fixed exchange rate against a basket of mostly European currencies that was stable and fixed for 10 years. And many thought that the battle for nominal stability had been won. But then, of course, came the ERM crisis following the German unification. And all of this is very nicely described in the book. And on top of that, we in Sweden and the Nordic countries had a banking crisis and a very deep recession. And by the way, so since then, the Swedish krona has been freely floating for many decades. But anyway, this multiple crisis, banking, currency, etc. crisis, it was a catalyst for a number of reforms that came in the 1990s that had been discussed in Sweden, mainly in the 1980s. And that was the rules versus discretion debate, very much informed by international academic debate. But of course, until the crisis of the early 1990s, there was not enough political support to follow through on any of the suggestions. And before I just go through describing those reforms, I will just like to say that many agree that these reforms have been absolutely critical to the more stable economic performance Sweden has had in recent decades. Now, of course, we've had our crisis, but the difference now versus then is that the crisis we've been going through have not been homegrown, but they have come from the international economy. But the reforms of the 1990s then, and as a reminder, Andre has already mentioned that Sweden is a member of the EU, but not a member of the euro area. We joined the EU in 1995, the same year as Finland and Austria. But anyway, the reforms of the 1990s, first the fiscal policy framework to make fiscal policy more sustainable, make it more sustainable in the long term. So with a surplus target, debt anchor, expenditure ceiling, etc., and also an independent central bank. And in that reform, Swedish policymakers looked much at what was going on in Europe, the discussion about the ECB, and also, of course, trying to think about how to import the credibility of the Bundesbank, so to speak. So what happened then was that these reforms were successful and they broke the price-wage inflation spiral that had plagued the Swedish economy for over 2 decades, where there were essentially very low real wage increases for many, many years. And as I mentioned, we have had crises since then, but they haven't been homegrown. What are the lessons of Swedish history? Cultures can change. of course, and some of the chapters of the book write about this. I think this is really interesting. In the Swedish case, this change of mind, let's call it the change of culture, was due to heavy pressure in form of a deep economic crisis, but also an international debate. I've mentioned rules versus discretion many times, and of course, the formation of the ECB was instrumental in also showing Swedish policymakers that an independent central bank is very important. But I would like to point out also that the Nordic countries at this time, they went through essentially the same type of crisis, but they chose different paths in the divide visible in the Markets Committee. First, just a few words about the Markets Committee, which I think deserves as much praise as possible. This is where the people who actually run the operations of central banks, the people who know the plumbing of monetary policy, to borrow a phrase from Patricia, this is the really important part of central banking, the doing part of central banking. This is the place where they meet and discuss important developments. And I was a member between 2007 and 2014 under Hiroshi's extraordinary leadership. And this was during the time of the global financial crisis and then of the euro crisis. My main I've said this to Francesco earlier, and my main takeaway was not one of different cultural clashes, but one of a very strong sense of cooperation, very productive meetings, because this was a sort of discussion among, let's call it, well, people who knew the plumbing. And I must just have a short anecdote just to show how the devotion of the members about. We had long meetings in 2008 and 9, and the meetings were 2 hours at that time. That wasn't enough, so we would start the evening before with a dinner, and those dinners would start at 7 o'clock, and they would sometimes last until midnight. And I remember in particular a dinner in January of 2009. I had Bill Dudley on one side here, Patricia was over there, Francesco was here, Hiroshi was right in front of me. I don't think any of us ate anything because there are so many important discussions going on. This was ahead some of the first measures done by, I think, the credit easing measures from the Fed. But coming back then to cultural differences, I mean, there were some, but I would like to mention another cultural difference, not an alpine divide, but one. A difference between the two Anglo-Saxon central banks on the Markets Committee. They chose two different strategies in combating the crisis, or at least in how they labeled and explained their measures. So while this Bank of England, at least in 2009, emphasized the creation of reserves and money and how this would filter into the economy and then support the economy, that was the Bank of England view. You had the Federal Reserve on the other side, that was talked much more about financial markets, how they functioned or did not function, of course, and the different facilities that were specially designed and targeted towards getting some of the spreads out of the market, so to speak. I thought that was very, very interesting. To end, I think I have 1 minute. I would like to put in a good word for the euro, like Trish and Hiroshi, because reading the book, I was reminded of the turbulent 1970s and 80s and the havoc that the ERM crisis or the crises, the havoc that they created, and in general, the economic costs of nominal instability. And I was wondering, I mean, how would the global financial crisis have played out in Europe without the euro in place? I think that would have been a horrible experience. And we have more crises since then. We have the refugees crisis and the current pandemic. So to be sure, there are many outstanding challenges and issues regarding financial architecture, etc., in Europe. But as always, there are always two sides of the coin. Okay, thank you, Andre.
Thank you very much, Marianne. As I was listening to the four of you, starting from Jean-Claude and now ending with Marianne, I thought that what Jean-Claude said really applied to all four of you. This, this shared ethic that you clearly have, shared culture, if you want, to share ethics of conviction and responsibility, right? You are all people who have devoted their lives, their professional lives, certainly, to upholding the system, the stability of the system, who have dealt with incredibly difficult crisis. And I think it was very good to remind that, all of our countries, whether it's the Euro area, whether it's the United States, whether it's Japan, whether it's Sweden, right? All of us have been facing crisis, different sorts of crisis, but very, very deep crisis, and very deep crisis that the monetary authorities that you have directed, represented, still you, Marianne, closely involved with, that those monetary authorities have been landed with the responsibility of dealing with. So in a sense, there is a shared culture. There's no doubt in your community, there is this shared culture. And again, I think this shared culture is about conviction and responsibility. And, you have the strong backbones. Now, what I wonder, in a sense, is, it's a difficult question, since it's, you people must have been frustrated sometime with those who were responsible for creating the crisis that you then were given the task of dealing with. And as I say, in very, 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 very difficult conditions. And so the question that I have is, did you feel that those crises that you had to deal with in these long meetings, sleepless meeting, without food, were those were those crises, in your view, whether the result of cultural problems in your countries, in your jurisdictions, were they rather the result of economic, social, political conditions? And that also, I think, brings an issue that there have been several questions on Slido. And again, I want to invite the audience to raise their questions on using the application Slido and using the code value of money. Several questions have been about the fact that in Italy today, the prime minister is a former central banker. But we had that also during the Euro area sovereign debt crisis. Some economists or central bankers became prime ministers. Was the case in Greece as well. And so, what does it say? I mean, what is the relationship here between your community of central bankers being given the task of solving a problem, solving a crisis, very deep crisis, and sort of the political world? Jean-Claude spoke about the social partners. So they put it on sort of the social, different cultures there. But social partners and politicians are obviously very, very close. Politicians have to deal with different approaches of social partners. So, what is your view on that? Yes, convergence within your community, shared culture, but then different cultures, not just within the Euro area, obviously, but more globally, different cultures, different conditions, and creating those tensions. Is that something that you felt always present, and you feel that inside Europe, there is some degree of convergence, or no, convergence and politics. You know, politics is by essence local, and one can think of convergence, and therefore crisis will happen in the Euro area across jurisdictions, despite the fact that there are people like you, and you will have, your community will always have to deal with the crisis. You will not be able to prevent the crisis. Is that some kind of a frustration? So let me just quickly, you know, run through the four of you, and starting in reverse order. Marianne, just be short on this so that we, you know, we can have a discussion on other issues. What is your reaction?
Well, as a central banker, I mean, what we are tasked to do with often is taking the longer view. And coming back to the financial crisis, I mean, this was the great financial crisis. This was a financial crisis that came about through, to make things very, very easy, incentives that were not aligned, that were not compatible in the long run. So of course there was a frustration in the central banking community that this happened, but I think we could all say that this had to do with classic moral hazard, adverse selection, information asymmetries questions. And in that sense, we could also sort of understand the crisis and perhaps think of ways to deal with it. So that was my reflection on the financial crisis. Thank you.
Hiroshi?
Yes, thank you very much. I think looking back in addressing the global financial crisis, I think, let's say, exceptional dedication was a common virtue among the central banking community. And the reason is that we had a kind of shared commitment, a common commitment to not only to monetary stability, but also financial stability. And financial stability in a global context means that everyone of the central bank community had more or less a common kind of an objective to keep the financial stability of respective countries, meant at the same time maintaining global financial stability. And that was a kind of commitment we all shared. And about the lawmaker, the politician, and the central bankers, I think central bankers, generally speaking, not as eloquent as lawmakers or politicians more broadly. Central bankers, I think, are typically, you know, people like ourselves who are technocrats, good at plumbing, so to speak, and had a longer view. And so therefore, you know, I think not necessarily compatible with the capacity required of a politician, but I think we can help politicians make the right decisions and make and move to the right direction. I think that I think was the role of the central bankers still now. Thank you.
Thank you. Patricia?
So yes, I want to agree with both Marianne and Hiroshi. A couple of thoughts. Crises are very complicated creatures. They have some very underlying economic issues, particularly financial crises, that manifest themselves in a variety of different ways. Marianne highlighted them, but they're sort of abstract and hard to explain. That's not the business politicians are in. A crisis like this, the public is looking for a simple answer, and bluntly, in a lot of cases, they're looking for someone to blame. That's certainly, central bankers are happy to blame people if they have to, but the truth of the matter is that any crisis has lots and lots of different causes. For example, some of the incentive alignment issues that Marianne happened in the United States, in part because it has a very ridiculously fragmented financial regulatory system. Guess what? That fragmented financial regulatory system is precisely a reflection of exactly the state versus national tension that is absolutely pervasive in the United States. They don't like one large institution being in charge of something. It's just the short version. So you can kind of, oh, well, that's sort of to blame. Well, yeah, but only partly. Central bankers want to understand and have to deal with the complexities. And that's just not the case in the political sense. And so the good news is, if you don't waste a crisis, you make an impression on your politicians as Sweden did, and you get your laws changed and so forth. I think in many countries, though, and in many jurisdictions, it only gets you partway there. I think that's true in the Euro system. It's certainly true in the United States, that the fixes that came afterward have been helpful. They have moved things in the right direction. But I think there's plenty of distance still to go.
Thank you, Patricia. Jean-Claude, I want you to react to this, and also because several people have asked this question about the role of central bankers in politics. It is the case, no doubt, that Italy is today a central banker, a former central banker as prime minister, and it's not the first time that Italy as a prime minister, as a former central banker. And I mentioned that Greece also had a former central banker as prime minister. What does that inspire to you?
Well, I have to say that the fact that you have recourse to a technician and not to a traditional political man or woman is something which appears when you are in a very, very difficult situation. After all, Mario Monti came as, I would say, a technician, not a central banker, by the way, but I would say very, very much the same spirit as Mario Draghi, the other Mario. And Lucas, it was so obvious that Lucas was credible because he was a technician. He was not involved in party politics. So I'm sure that Mario Draghi will succeed. He has all the quality and the information and the experience to succeed. And I take it that it was certainly a very, very good idea for the Italian democracy to go along this choice. Now, if you permit, two things. One, very short, on the great financial crisis. Clearly, it was a drama because we were really thinking, I'm not mentioning, any particular responsible person or any particular central bank, but we were collectively thinking that we were in the best of the world possible until the crisis exploded with a violence which was incredible. And I will not quote all what was said just before on the fact that clearly we had found the best way to combine inflation being totally mastered with growth, which was very, very flattering, and both, I would say, volatility of inflation and growth were exemplary. So I stopped there, only as a warning shot. Where are we exactly today? We are all congratulating because we are doing extraordinary things, extraordinary public spendings, extraordinary activity of the central banks. I'm not that tranquille as regards both what happened between the previous crisis and the COVID crisis, because we continued to have enormous problems in all advanced economy without exception, and what could happen in the years to come. And I would say vigilance is absolutely of the essence now. Second, only to mention that in Europe, clearly the main problem we have is poor management at the level, poor economic management at the level of Europe itself. I trust really that the success in terms of stability of prices by the central bank, in terms of the central bank being the anchor of the euro area, is absolutely clear and was mentioned by all speakers, and I trust they're absolutely right. That being said, clearly we have a problem of the MIP, the macroeconomic imbalance procedure. My first discovery in '85 was that finally, as president of the ECB, I had not too much problems to deliver price stability. And by the way, we delivered extraordinary price stability during all Wim Duisenberg and myself, and of course, even more than stability with Mario, despite all efforts of Mario and the central bank to do better in terms of having some kind of stabilization around 2%. But all the first years, we were exactly at 2%. And we could claim that we had a fantastic stability. But the persistent divergences in the economic area between the various countries was terrible. And in my opinion, the main problem we still have is to have economic governance, SGP modified, plus MIP, very strong, very solid, because again, the underlying culture of social partners are different in the various countries, and they have to be counted. Otherwise, of course, it cannot work in a system where you cannot have any devaluation or re-evaluation or whatever. So yeah, you have really to take it that the, I would say, overall cost competitiveness, and of course, or out of cost competitiveness have to be monitored, and they cannot be monitored by the countries themselves, in my opinion. It has to be monitored also by a dialogue between the European institution and the countries. Stop there.
Thank you. Thank you. Very, 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 I think, important, very important point. The to bring in not just the SGP, but the MIP. And we know that this has been extremely deficient. Very important, but very, very deficient. It has not. We have not really succeeded in using that as a tool of economic policy in Europe. There's been strong resistance to that. Now, there are a number of other questions. There are quite a few questions actually on Slido. I do want to give Francesco and Thomas the occasion right now. It's 2 o'clock to come in to make a comment if they wish, a reaction. I mean, they said they were they are the editors of the book. They conceived it together with their colleagues at Villa Vigoni. So I would be happy to hear from them their reaction. Francesco, do you want to start?
Well, I said that we were here more to listen than to speak, but I would like to make maybe a couple of points. The first one, reacting to your frustration story. Were we frustrated? Not much time to be frustrated, I would say. The problem was doing things to remedy. I think many times what central banks have done was assimilated to what the firemen do. Yes, you can think of who set the fire, who did the wrong thing, but you have to put the fire down. That is the one thing you have to do. And so in the Markets Committee and in many conversation over the phone, the urgency was we have to do something for this. We have to take care of this. So not much time for frustration. Maybe the other point that I would make is the book is not a consistent piece. In the book, there is a lot of diversity and inconsistencies. I mean, in one chapter you read one thing, and in one chapter you read the opposite thing. So the book doesn't have a single message. It's diverse. However, this reminds me of what Jean-Claude used to say, that the ECB was born out of parents with very different DNA. And so there is a lot of strength in differences in DNA. With the crisis, it seemed that these differences were a weakness. And so I'm torn now whether to still be on Jean-Claude's line or to have moved to the story that we have seen again these differences as a difficulty. So these are my very short comments. Thank you.
Thank you, Francesco. No, Thomas, you were not a firefighter, not part of the central banking community, but you were always and still are in the financial community. So lots of interaction, obviously, with central bankers. What is your reaction to this discussion?
Yeah, thanks, Andre. Just on that note, my place was in the fire, in the house that was burning. So I appreciate the firefighters that are trying to extinguish it while we were sitting in there. Let me take this opportunity perhaps to thank my co-editors, Christiane Liermann, Matteo Scotto, Francesco, for having such a great collaboration on this joint and truly joint Italian-German project. It was fun to work together for this book. And I have to say, I really appreciate the contributions because I had and was allowed to read them more than once as we were going through the production process. So I think I got a pretty good feeling of what was coming through. And a very, I would say, yeah, personal reaction to what I was reading and sort of when I was also grappling with the issue of the difference of values. A very subjective takeaway for me was that in a way, we are still a bit haunted by the ghosts from our past. Jean-Claude Trichet mentioned at the beginning, Italy did not have hyperinflation after World War I. It had a completely different path from Germany. There was harsh austerity under the Mussolini government. There was a hard currency policy, quota 90, 90 lira per pound. And that was defended, quote unquote, from a Mussolini speech at the cost whatever it takes. So that was an Italian experience pre-World War II. The German experience was completely different. We did away with our debt through hyperinflation, and that was one of the traumas that are still alive at present. We had then later an economic and monetary policy that was very creative, very discretionary. Hjalmar Schacht was a banker, but also a financial genius. He was the guy responsible for the currency reform, introducing Reichsmark, but later on, he sort of invented QE as Reichsbank president and helped actually to fund through QE the German war preparations. As an economics minister, he was, before it was invented, he was Keynesian, demand management. So in a sense, we come from a very different background. And in a way, my personal impression was we are now sort of trying to be the opposite. The German reaction was, oh my God, please no more discretions. Let's stick to rules. We have had enough of it, right? This was why Ludwig Erhard sort of brought up the rule-based policy. And those present who have negotiated with the German side in the preparation for EMU will have still this echo in their heads, what that was all about. My interpretation, sort of from an outsider, is that in Italy it was just the opposite. You've had enough of Mussolini-type austerity. You were inclined to be more discretionary. So we come from opposite sides in a way from our historical experience. That was one thing, a very personal takeaway that I had from this book. Now we are in Germany much more rules-based, and the Italians like much more discretion. Looking forward, and with this, then I will stop. I sensed also from the book, but maybe also from general conversations, there is more optimism in Italy about the future of the euro than there is in Germany. And when you look at the book contributions, and I can, in a sense, these are not just outliers. There is a bit of frustration, and I sense this from the book as well, that in a way, the German model is losing out. We are losing out on rules-based policies, and we are moving towards discretion. And some of the old ghosts that are haunting us are coming back. And looking forward, I would say it's probably important to keep these cultural differences and interpretations a bit more in mind. I think it was very interesting what Patricia Mosser said, that the Federal Reserve is much more regional than it looks to the outsider. And if I understood you correctly, there is much more appreciation also to translate what is done at the center into the regional thinking and into the regional and create regional acceptance. So that would be sort of my conclusion looking forward.
Thank you. Thank you, Thomas. I think having read, not having just contributed, but having read the volume and being one of the few non-German or Italian who contributed to the volume, but I think I read nearly all the contributions. I sensed something quite similar to you from the sample, obviously, of those German economists and those Italian economists who contributed to the volume. There was a different view on the euro going forward. I sense the same thing that you did. No, don't know whether this is representative at all of German views in general, Italian views in general, even the Italian economist or German economist. But I think in the book, definitely there is more optimism on one side and more pessimism on the other. And I think the way you put it, I think is, as I said, it's exactly the same feeling that me, as a sense outsider to Germany and Italy, I did detect that. Now again, I don't want to to make too much of it, but I think one cannot ignore it either. Now maybe let me ask a very last question, and it's already 2:15, so time is running out. But I do want to ask that last question again. Ask each of you, although it's a big question, to really take just one minute on this question. So going back to the four original speakers, now is the question about QE. I mean, I think we have all gone through QE in different manners already for the last 10 years, in Japan longer. And I think Jean-Claude insisted, as he often does, and I think rightly so, to say that the advanced economies, and we are all advanced economies in this discussion, have gone through a number of severe crises, and I think Jean-Claude expressed some worry that where is this taking us? Yes, sure, the monetary authorities are fighting those crises, but to what extent and up to what point is QE the answer? Sure, we need QE, but at some stage, and we all say, at some stage we need to stop QE, but then another crisis comes and another round of QE, in a sense, comes. And so one of the questions that was raised, I think the natural question that follows from that is, well, is central banks, independent central bank, is that something of the past? Is the dividing line between governments and central banks behind us, at least for quite a while, as we are going from crisis to crisis? So what is the implication of this? And can we go back to the world of yesterday, or is the world of yesterday behind us, where we had this neater division between central banks and government? So if you could each just take 1 minute On this, I start with you, Jean-Claude, and then Patricia, then Hiroshi, and then Marianne. Jean-Claude.
Thank you very much indeed. 1 minute on such
Sorry about that.
A real challenge. I would only say, I think there is nothing to say on what was done in terms of QE or I would say non-standard measure in general in Japan, in the US, and in Europe in the time of the great financial crisis. I think there is nothing to be said on what just happened with COVID-19 and the extraordinary interventions in the form of QE of all three central banks, particularly, of course, in the US and in Europe. What is extremely alarming is the $9 trillion that were injected by the same central banks. I'm only speaking of the three I mentioned, during the period which goes from the great financial crisis up to the day before COVID-19. 9 trillion. And in my understanding, because the central bank were obliged to protect our economies against the materialization of the deflation risk. So there is nothing to be said on the central bank themselves. We cannot afford the risk of deflation, neither in the US nor in Europe, and Japan knows better what it is about. Still, of course, the other partners did not correct the abnormal behavior of all advanced economy during 10 years between the two crises, or even more than 10 years, is profoundly abnormal and is not recognized as being profoundly abnormal by all other partners. And I mentioned the government, the parliament, certainly also the social partners. It is profoundly abnormal that in countries that have full employment, you still have unit labor costs that are miserable. It was the case during all that period, maybe it changed a little bit in the US, but during all that period in the countries that were in full employment. And that is something which has to change. It has to change. We cannot afford continuing like we did during all this period. COVID-19 introduces a new dimension, of course, but the real problem is to get back to a normal functioning of the advanced economy. And again, if you give me 1 hour, I could go on. Thank you very much.
Thank you, Jean-Claude. Patricia.
So I am going to enthusiastically agree with Jean-Claude, and in particularly say that the lack of fiscal policy response, or inconsistency maybe would be a better term, across the advanced economies was a major contributor to the central banks, as the famous saying goes, being the only game in town. And central banks were doing, as a result, extraordinary things about which the effectiveness was positive, but required incredibly large size and long, long periods of time to get any results, or to get the results that you wanted. And on inflation, it never got completely the results that one wanted. I have perhaps a bit more hope than Jean-Claude does, maybe because I'm sitting in the United States. But the fiscal policy response, because COVID is a public health crisis first and foremost, the fiscal policy responses in many, many countries has been much larger and appears to be more sustained. The nature of the bounce back is different too, since it was a public health crisis. I'm somewhat more optimistic, not to mention it was a little bit of a little bit of an aggregate supply shock too. I'm somewhat more optimistic that we are going to see in the advanced economies better growth, more inflation, something back to target. Wow, in the United States, their Fed's even going to let inflation get above target for a while. But my point is that the different nature of this crisis makes me slightly more optimistic that we're not going to have 10 more years of QE.
Thanks for the optimism, Patricia. Hiroshi from Japan.
Thank you. Yes, about QE, I think in retrospect, there are two probably objectives the QE. One is to restore market functioning, and the other is to reduce the risk the term premium. In other words, lowering the long-term rates. So in retrospect, these were the two objectives, maybe implicit, but so that's something that we did. But over the past, let's say, 3 crises in our case, starting with the homegrown financial crisis, GFC, and COVID, I think the central banks have really crossed the river of no return. Meaning that what we have done in the past is quasi-fiscal policy, buying a lot of government bonds and also credit instruments, which means a lot of credit risk and market risk remaining on the balance sheets of the central banks. And this is unprecedented in both in terms of quality and scale. So where are we going? I don't think we're going back to where we were because now, even in a normalized process, I think we can now, the central banks, major central banks can control short-term rates by adjusting the interest rate payments on excess reserves. So you don't need a very fine-tuning kind of operation that used to before the GFC. But we still don't know what this new normal would look like. This is still unknown because, as I said, there will be no minimum reserve requirement, so forth. So largely remain unknown. And this is kind of navigation in uncharted waters of the central bank community continues.
Thank you, Hiroshi. And Marianne, what is your perspective from Sweden?
Well, well, seeing monetary policy as an isolated policy area, isolated from other policy areas, I don't think it's no longer tenable. Monetary policy, as it must be conducted today due to the low level of long-term interest rates, means that monetary policy overlaps or comes very close to other policy areas such as fiscal policy and macroprudential policies. So this is extremely hard to and this is a very challenging situation because I mean the principle of central bank independence in conducting monetary policy, that principle is not only enshrined in legislation but has also turned out to be a very useful concept. But so where does the independence stop then if monetary policy authorities conduct policies that are very similar to other types of policies? This is the thing to discuss in the coming decades, I think.
Thank you, Marianne. I fully agree with you that this is something to be discussed, and it was very unfair of me. I agree to put that question at the end and ask you to react in 1 minute. But I think your 1 minute was very, 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 very powerful, and I think does invite the need to have a full discussion of this issue. In a sense, what we hear is that central banks are a bit victim of their success, right? And some politicians have discovered that central banks can do certain things that make their life much easier, and therefore this is taken into a spiral that is now difficult to deal with. And I think we shall need to really have further discussion and reflection on this with central bankers and politicians, or at least finance ministers, discussing this together. So let me thank all of our speakers. I want to thank really especially Patricia and Hiroshi, for whom the time has been less comfortable than for us in Europe, where we are, 1 o'clock, now 2 o'clock. I know for you, Patricia, it was early in the morning, and for you, Hiroshi, it was already late in the evening. So I really very much appreciate. So let me thank all our speakers. Let me thank also Thomas and Francesco and the other 2 editors for taking this initiative. Let me thank you for involving me in this project. I really enjoyed the book, really enjoyed the discussion, and Let me thank all the audience and invite them to prolong this by reading the book. So thank you, everybody, and have a good afternoon, evening, or day. Bye-bye.
Thank you.
Okay.
Bye-bye.